Hello everyone, this is Matthew Frailey with BreakpointTrades.com, bringing you advanced technical analysis and commentary on the market, mechanical systems, and trade ideas since 2003. Okay, let's go ahead and get right to it. So again, this is a video newsletter review follow-up on the markets, and it's September 28th, 2021. It's kind of late here. It's about 10 p.m. Eastern, so some of you may be seeing this on Wednesday morning, which is honestly just fine. Okay. So if you've been following my recent newsletters and market commentary, I viewed last week's rally as a reflexive rally. I thought it would form a lower high and ultimately come back down. So I viewed last week's rally as a wave B, and then that we needed ultimately another move down in a wave C. That's the scenario I favored, and obviously with today's action, that's what's playing out. So hopefully you guys have been paying attention to that. Also, the mechanical systems did great long trades last week and exited perfectly on Friday. So they did well. We'll cover that as below when we get to that. Otherwise, we're going to review a variety of things tonight. I'll let you know what I think is going to happen from here. And follow up on what I've been talking about recently. So here's the table of contents of this newsletter. We'll first review the general markets, major indexes, etc. We'll review some indicators, bonds, TLT, and the 10-year Treasury Yield, a few sectors, the dollar, commodities, precious metals, trade ideas. We'll go over mainly recently triggered setups, and I did have a few here to monitor. But again, obviously not going to look at too many ideas in this volatility. So let's go ahead and move on. So this image shows you a table of what transpired today and, of course, for the week so far for the major, basically for the market as abroad. So here's the major indexes. Again, big down day. Like I said, the S&P down about 90 points or 2%. The Dow was down the least. You know, big losses here across the board and for the week now. Okay. Here's the 21 market sectors we follow. So broad-based sell-off. Energy managed to eke out just a small gain. You know, is well off the highs as you'd expect. That area's been strong. You can see that's strong for the week. I think this area is definitely an area that will likely form a higher low on a pullback. So it's one to watch. But big sell-offs here. By the way, utilities, XLU, the ETF has been down 14 days in a row now. So getting very stretched. We'll talk about that below. US dollar up 0.36%, up 0.5% for the week. Remember that chart looks bullish. We've been showing that for a while. Crypto's down today. Commodities, mostly to the downside. A few were still up, like natural gas, agriculture. Precious metals, gold is not rallying in this environment. The rally in dollar is not helping, and that area just continues to get pummeled. Okay. Bonds, high yield corporate let loose, as well as TLT down 1.5%, which is a pretty big move. So moving on to the charts. So first, before we get to the index charts, this image here shows you our SPY mechanical systems. As you know, whenever these systems do a trade, I send out a trade notification to our subscribers. There's 21 subsystems, so think about it like 21 individual subsystems. There's 9 systems that do shorts. None of them did shorts. Surprised none of them shorted this rally, but they didn't. That's fine. You know, all year long they haven't done anything because the market's been uptrending. Over the last couple weeks, I have 10 of the subsystems on this chart. They did a trade back here, and they were in a trade last week. Closed out on Thursday and Friday for a great, nice winning trade. The trend pullback subsystem had a first entry back here in early September, which the first entry was a slight loser, but then the second entry more than made up for that. CCI oversold system had a nice trade. But I'm showing this because I had some folks ask, well, if today's sell-off, did any of the systems go long? Any of the 21 subsystems? No, they did not. Okay. If any of them go long over the next few days, I will let you know. Okay. These are high probability systems, so whenever they do go long, I think it's going to be a pretty good trade. All right, let's move on. Look at the index charts. So this chart here is a chart of the 5 key major indexes. Here's the Dow at the top, S&P. Again, you can see broad-based sell-off, obviously, on everything. The Russell's been stuck in this range for quite a long time. Let's move on. Here's the here's the technology sector, XLK. And this sector looked weak last night, especially last couple days. And again, tech is such a big part of the market. One thing we were talking about last week was that if the market was going to recover to new highs, it needed tech to participate. Tech, and then of course interest rates. So you had a couple things going against the market. You had money rotating out of tech, which we saw yesterday, and rising rates, which is bad for tech. Anyway, you know, this sucker stalled right here at the downtrend line. Big sell-off today. And as I've been pointing out here, you know, you don't have much support down here, guys. You know, you had this little air pocket to here. So over time, I think it's going to at least move down to here and then probably down to here, right? Also, you have your 200-day moving average. So if price goes down to here, it's possible the 200-day moving average will catch up to it. So I do believe over time, XLK will work lower down to those areas. All right, moving on. Get rid of those. Here's the Dow. So the Dow, you know, stalled right at this resistance area that I talked about on Monday. So right here at the 50-day moving average, this area was a previous support, became resistance. Again, this is your big support right down in here. We almost tagged it on that last sell-off, but again, it seems to me like we at least want to go down to this area. And now below here, you don't have really any support. You have kind of what I call these air pockets, area of little support. So the bulls better kind of hold this area, otherwise it could, you know, set up a move down to here. So think about all these areas as little air pockets. Okay, I don't think we're going down to this range, guys, but you know, you never know. But at least I do think probably kind of this area, and then maybe we'll get some sort of bounce attempt after that. All right, moving on. Let's look at the S&P 500 chart. So here's the daily S&P. This is the chart I've been talking about over the last couple weeks, the S&P daily, with the focus here on the 50-day moving average, which is in red. There's two of them here because one's the SMA and one is the EMA. So all year long, we've had little corrections down to the 50-day moving average. Sometimes, you know, you undercut it by a day and then recovery. Move down, recovery. Move down, recovery. We've had this happen all year long. And if you go back and listen to my newsletters back here in September when we were selling off, I didn't think it would hold the 50-day this time, and it did not. It instead sold down to this is the 100-day moving average. Undercut it a little bit that day, closed above it. Okay. I favored this move down as an ABC of A, where the correction was not finished, and this rally up would form a lower high ultimately. It didn't stall at the 50-day, got a little above it, kind of around the 61.8% fib retracement. So I favored a lower high. Again, go and listen to my newsletters from the weekend, from late last week. I talk about that. Now this appears to be playing out. So we have wave A in, wave B in. Now we're working on this wave C. All right. So over time, you know, I favor maybe move down to here. If not, even all the way down to the 200-day moving average. Okay. But we'll see how this unfolds. So wave C, you can see I've already had that wave C in place. Now the more bearish view, guys, would have this as a wave 1, 2, and then this is a 3 down. I don't view that at this point. I view this as a C down, but for a C, it should go low over time. Short term, we are oversold here a little bit. We're back to the 100 moving average. So, you know, could we have a little short-term bounce here? Yeah, but ultimately I favor lower prices. All right, moving to the next chart. So here's another daily view of the S&P. I've been showing this. You had this broken up trend line here, the symmetry moves, parallel lines. We stalled right here just below the declining 20-day moving average, that wave B. Again, over time I favor moves down possibly to these areas. Another thing, guys, I like to point out is the moving average ribbons, how these are very useful guides. So you can see what happened here. This moving average ribbon went from, this is a bullish configuration where you have, so here's your 4 moving averages, you know, your fast one in magenta, then the slower one, and the slowest one. So they've all been bullishly stacked all year. It flipped here, and then you had this pinch here as of Friday and Monday. It's this pinch, that first pinch on the underside, where you look for a low risk short, and that's what we got here, a big throwback today. Next. So this chart here shows you one of the KISS daily charts of the S&P, and these DVTs are hit back here, but what I want to focus on here is the moving average ribbon. This is the moving average ribbons, and you have the BPTMA Deluxe, and you can see how it had went below the ribbon here, and then was pinching on the other side. It's that pinch where you look for low risk trades. This case was a short. It's the opposite of these. Whenever the moving average ribbon is a bullish configuration, you look for these pinches as buy opportunities, right? This was so where the BPTMA is red, you look for a buying opportunity. Well, if the BPTMA is below the moving average ribbon and it's green and pitching, you look for a low risk short, which we got. Next. Here's another daily chart of the S&P. It shows you this long rising wedge that we've been talking about. You know, we broke this early last week on Monday, and I was favoring a lower high. Wasn't sure if we would get up a little bit higher, maybe tag this broken trend line of the wedge. That was possible, but we didn't quite make it up there. Now we're heading back. Okay. Now here would be the target of the wedge, but if it gets down to here. So how you measure a wedge is you take the height of the wedge from the back, subtract it from the high. Think that is a symmetry move. So that was about 380 points, subtracted from the highs. So you get a target right around, say, 4170. Pretty damn close to that 200-day moving average. So we'll see if that ends up being achieved over time or not. Next. Moving to the intraday chart. So here's the 60-minute view of the S&P. And again, if you go back and listen to my newsletters, I talk about this. We saw this 5-wave uptrend here. 5 is kind of being covered over by this text box, but you can see it here. So this way we started getting cautious or a little bit bearish in early September. Plus, as you recall, and we've been showing the statistics to that. Bring that into view real quick. Here's various seasonality charts from various sources, and they all have where the market is typically weak from September into early October, sometimes starting mid-September, but all these seasonality charts, so typical market seasonality from the September timeframe into October. And so aligning with this wave count, 5-wave uptrend, we were cognizant of that. We started selling off. We got what we counted as 5 waves to the downside initially, wave A. We had a logical wave ABC bounce, lower high here. Another move down, which we labeled as wave ABC of A, which we favored. This would be wave B, and now we're going down in wave C. Last night I pointed out this coil pattern, which obviously busted the downside. Next. So this chart here shows you a 10-minute view. You can see that coil. One thing I was watching right this morning was this open gap. That was a target, and boy, that was filled right away. Sold off, 100 points. 1 point had a decent bounce here late in the afternoon for a trade, and then the sell-off in the afternoon. Next. Here's a 15-minute view. Again, it shows you this ABC bounce, lower high, sell-off. And below here also negated the bullish case where we were talking about. A 43.95 would have been an overlap of a wave 5. Finally, here's a 5-minute view showing today's action. And I'm showing you this for some education. So we gapped down this morning, gap and go. There were some indications that this would increase, the market would continue selling off. So one could have chased this gap. But anyway, here's one thing I'm monitoring today, guys, is symmetry. So the first intraday, I look for the first rallies, how strong they are. So 16 points. So that sets the stage. You need to break that. A rally larger than that, to have some sort of intraday low. We had a 14-point bounce here, so you did not break symmetry. Even though you had positive MACD divergence here, that did not get a symmetry break. Then here you had a 20-point bounce, okay, midday. That was larger than that. That was a symmetry break, okay? So when you get that, you look for a higher low, which we technically did get here, really more of a double bottom, but you got it. You got your trade opportunity. And again, you know, from here to here, you had a good 30, what is that, the 82? You had about a, a good 37, 38-point rally. So it was a decent long opportunity. Also, notice your MACD divergence here. Whenever your MACD is kissing and you get your oversold stochastics, that's what I call the MACD kiss oversold stochastic combination long. So you had your long setup here for a trade, okay, and then of course you sold off in the afternoon. But the symmetry is a useful tool. I'll make a separate video about that one day. Next, moving on to the other indexes. Here's the triple Qs. Again, big cap tech has been selling off. You know, you could first off you could see the moving average ribbon, how it flipped bearish last week and then had that bearish under pinch here, and then a throwdown. This is you could see big sell off today. Back to this. Remember, these lines here are supports. You're back to here. This is kind of a thin zone, guys. Not much support here until you get to here, and then below that, here. So over time, I do believe this is going to work lower. So while the S&P has not taken out its last Monday low, the triple Qs have. So they have confirmed an ABC move down. Next. Here's the 60-minute view of the NASDAQ. Again, you can see how it stalled right at the 61.8% fib retracement last week. Wave A down, B, now working on C. It is quite oversold here, but look, there's no MACD divergence or anything, so any rally attempt here will be sold, okay? Next, let's look at the Russell 2000 small caps. They were up initially. They were up pretty nicely yesterday. They stalled right at this downtrend line within this bigger pattern. That's why I drew that. Okay. Otherwise, they've been going sideways all year long. Moving average ribbon been pitching here. Let's look at the daily chart. So here's the daily chart. You know, you can see the big channel it's been in all year long. It's kind of a coil here. We had a nice rally going yesterday. Stalled right at the downtrend line here. Big sell-off today. Now, let's take a look at some Fang stocks, guys. So let's be honest. Unfortunately, in this type of market we're in, a handful of stocks have a huge effect on the indexes. Okay, Apple represents a massive percentage of the S&P and triple Qs. Okay, so these are names you got to follow. I call them the generals, and they have not looked good. So here's Apple. I've been showing this chart for a couple weeks. It lost this support a couple weeks ago. I said to watch this broken trend line as resistance. It rallied up there. It actually gave you a low risk short opportunity. Was rejected there, now coming down. And remember, I talk about these thin zones. So you now have a thin zone down to this area. This area is support because this was the previous high back in April. Okay, so I think Apple over time will work down to here at least. Let's move that. All right. So I think it will at least move down to here, if not down to the 200-day moving average. Again, remember the 200-day moving average is rising, so it will catch up. It will move higher over time, but eventually it's going down to here, guys. Maybe that'll be a good buying opportunity. But over time, this looks lower, and that won't help the market. Okay? Next. Here's Microsoft. So Microsoft, I pointed out this double top a couple weeks ago. Started selling off. Initially held the 50-day and then finally let loose. So guys, when things like Apple were right at resistance, say on Monday, and Friday, that's not a time to just think the market's going to easily rally back to highs. That was an area to look for a reversal. And you can see Microsoft, perfect double top here. There's an open gap here, little magnet. We'll see if we get a bounce here. But again, guys, I like to look at these thin zones. There's not a lot of support here, into here. I mean, you could I guess there could be a little bit of support right here, but it's not a lot. So this may work quite a bit low over time too, but I don't expect a straight down move. Let's move on. Here's Google. Google also selling off, lost its 50-day moving average, and just like the others, what do you got? This kind of thin zone into here. So, and then below that, there's another thin zone down to here. So if these generals work lower, like the chart suggests, market correction is far from over. Next. Facebook or FaceCrook. Same deal. First off, look at your moving average ribbon, how it flipped about 2 weeks ago. Not a lot of support in here until you get down to the 200-day moving average. Next. Chart number 23, Amazon. So Amazon have been shown this pattern. I'm not in love with it, but, can you draw it as sort of a head and shoulder top? You can. Boy, if this thing were to play out, that would not be pretty for the market, but we'll see. Another thing to monitor, Disney. If you look at my newsletters from the weekend and yesterday, I mentioned to watch for a short on this bounce. I'm personally short Microsoft or Disney. So again, what did you have here? A big volume sell-off, light volume bounce. This was a short opportunity here up here. Now this is your big support. If Microsoft were to lose this support, then you could have some real trouble. Okay. One thing we talked about on the weekend and late last week was that a lot of companies are starting to report that they're going to miss earnings. They're reporting things like labor shortages, which we know of. They're also talking about supply issues. And that could be telling for earnings season that's going to be coming up here in mid-October. All right, so that does it for the indexes, guys. Let's look at a couple indicators. Here's the VIX. So nice update on the VIX today. Did not close outside its Bollinger Bands, obviously. Remember, when the VIX closes outside its Bollinger Bands and then back inside, that gives very reliable buy signals. We call it VIX Bollinger Band buy signals. And you can see these vertical lines all year long. They've given great signals. There was one last week right here. Gave you a trade. Obviously, you need to take profits, but it gave you a trade. But nice update on the VIX, but not outside the Bollinger Bands. Next. Here's the VVIX, another very reliable indicator. Whenever it first crosses above 110, like it did back here in early September, that was just off the highs. That was your warning to get out of Dodge or get defensive. We had a nice market sell-off. It was firmly below 110 as of Monday and even on Friday. But, what happened was we had that big gap this morning. It went right above 110. So you kind of had to short on the market right on the open. But, if you wait for the close, it's obviously well above 110. Hard to chase that at this point, but it did go back above 110. Next. Here's J&K high yield corporate bonds. They also sold off right at the 50-day moving average. Now we'll see if it starts falling into this thinner zone, which would weaken the market further. Next. Here's TLT 20-year Treasury Yield or 20-year bonds. So they've been in this complex ABC type correction. They put in their highs last week at wave C, moving lower. Next. Moving to the 10-year Treasury Yield. So I had some bigger picture charts on the 10-year Treasury Yield on the weekend and on Monday. So they were up again today. That's obviously spooking the market, obviously spooking big cap tech. And, it makes sense, guys. Clearly the Fed, and it's kind of funny, the Fed's now kind of admitting that interest rates could be more of a problem instead of just transitory. I kind of say no duh to that. One thing I don't have on this chart is to monitor the symmetry. So short term here, it may be meeting a symmetry target. It may get a little pullback. But you can see how the moving average ribbon flipped. All right, moving on. Let's look at the market sectors. a few of these. I already talked about XLK, big cap tech, money rolling out of it. Probably work lower to these zones. Next. Here's the communications ETF. Contains a lot of these Fang stocks. Yesterday I said it looked like a bear flag. It looked bearish. And you can see that playing out today. Maybe ultimately go down to this point. Again, I don't expect a straight move down to here, guys. Next. Looking at something a little more positive, energy. Last week I showed this inverse head and shoulder pattern, which is playing out. And well off the highs today, but still closed up. So if we get a pullback in this area, like this, maybe a buying opportunity. So look for a higher low here to buy if you're not long. Okay. Next. Oil services, same deal. This area is now potentially support. Next. Here's the bank sector, which had a big move up recently. Again, we had some money rotating out of big cap tech into the banks, but, you know, nice give back here. This was also a little deceptive, guys, because if you think about it, the big money is in big cap tech. And so just a little bit of money rotating out of big cap tech will cause some of these smaller sectors like this and, you know, energy to have bigger moves than you would think and be deceptive. Next. Here's financials, stalled right at that resistance. Next. Chapter 36, XLU Utilities ETF. So if you look at this, guys, if you count the red candles, it is down 14 days in a row, slightly undercutting the 200-day moving average. For you reversion to mean statistics fans, this is one you may want to look out for a oversold bounce. Think about, like, you know, if you flip a coin too many times, you know, if you flip heads too many times, you're due for a tail. Same thing here. It's statistically getting stretched where eventually you're just going to have a reversion to mean bounce. So you may want to look at this. I still don't see a good, the 60-minute chart still doesn't look that good to me, but it's probably close to a bounce just statistically 14 days in a row. Next. Here's Xov Healthcare. We had a double top back here, which we talked about in September. Then you had a little support area. Lost that, became resistance, selling off. You know, not a lot of support on this one either until you get down to, say, this area. And then, of course, you know, at that point, you're near the 200-day moving average. Next. Real estate. Lost that shelf support the other day. These are your next supports down here. Raising rates obviously don't help that. So if we do get a bounce here, this area, broken trend line will be resistance. Maybe come down. Something to monitor if you get a bounce. Looking at just a few commodities. Not going to go into all of these. So here's the DBC, General Commodity Index, down today as expected, you know, with most things. Next. Here's crude oil. Again, crude oil has been on fire lately, but a little off the highs. You also have this little resistance high back here. So crude oil ultimately looks very strong. Next. Natural gas had another rally attempt today, but well off the highs. Quite extended at this point, guys. Nice rally off that 20-day moving average back here. Next. Copper. Kind of been maybe a coil is starting to form here. Your trend lines here, your support and resistance. DBA, nice rally out of this wedge so far. And finally, Joe, the coffee ETF. This was more of an interesting one. We've been showing this as a tight coil. Started breaking this late last week. And it's been pushing higher. Still looks really good. Don't tell Starbucks. They'll want to raise prices. Next. One more commodity here. So Uranium Etf. As you know, I've been bullish on uranium. I'm monitoring this as an ABC pullback. I have not bought yet, but I'm looking to buy this pullback sometime. All right. So it looks like we're working on this wave C at this point. Moving on. Cryptocurrencies, Bitcoin. So far we have sort of an ABC correction going on here. Recent bounce stalled. Now it's back to this little support area. Next. Ethereum. Lost this trend line, sort of had a sloping head and shoulder look to it. Quite choppy here lately. Next. US dollar. We've been showing this chart. Looks super bullish. We've been talking about that. I mean, and quite honestly, you know, could the dollar over time move up to this point at previous low in, say, 2021? It's possible. Wouldn't be too good for precious metals, quite honestly. Okay, moving on. Gold or smold or whatever you want to call it. Gold just ugly, ugly. Stocks continue to underperform here, as you can see by the GDX GLD ratio. Silver, it's trying to hold on to this self-support here, but will it hold? We'll see. Next, GDX on the daily. You know, little trend line here. We'll see if it can get over there. It's this area, again, guys, if you're a gold bug, you're not doing well. Finally, 60-minute view of GDX. Little hope here is a falling wedge. This may need another little decline for a true wedge, though. Kind of like this and then here. Notice your MACD divergence. True wedges have 5 waves. I can only count 4. 1, 2, 3, 4. Or 1, 2, 3, 4. So. All right, guys, moving on to follow up on trade ideas. Going to make this quick. Here's Jets, the airline ETF. As you know, I gave this as a long idea last week. It was a really nice trade. Had your spinning top doji yesterday, which was a sign to take profits. Now you're pulling back. Next. DVN, energy play, natural gas. This was a long idea of mine last week. Awesome trade through that 31 resistance. Little black candle now, though, quite extended. Next. Charter 55, CVX, Chevron, energy stock, obviously moved up nicely through that trend line. Take some profits. Next. Charter NCMI, really been a great trade. Now I think it's the time to take some profits, guys, if you haven't done so. I really like this pattern. I like the base. It was a low-risk setup versus a breakout stock at new highs. Notice your 9 and 20 moving averages moved together here. You had great volume patterns. This is a great trade initially out of this pattern. Initial stall at the 50-day moving average and has been powered up. See your moving average ribbon. Just a beautiful trade. Again, this is a long idea, guys, from a couple weeks ago. Next. PAG, another long idea from a few weeks back. Really played out. Cup and handle. Obviously, you should have taken some profits. Next. Here's Blue, another one. Now, this one's just coming out of the space. This has been on the list for a while. I still own a little bit of it. Notice how well it's holding up. Again, it's based out. It's not overextended, you know, overbought like the other stocks were. 50-day moving average would be the initial target here. BCTX, there's another recent one from the weekend. This one last week. It busted out on Friday. Pulled back. Notice that pullback held that 9 EMA. So if you gave it that room, you could still be in it. I'd move your stop up now to your break even at this point. Next. Here's the setup I'm monitoring for a long OSCR. It's in this coil pattern. Held up very well today. Now, it could technically be a short below here. But, you know, for now, it still looks, I still favor a long. Next. Here's BABA. Chinese internet stock. That area has been absolutely horrid all year long. But you have a falling wedge here, something to monitor, MACD divergence. We'll see if this can move out of the pattern. If you're long here, put a stop right here at the low. Next. Here's a fun stock, Potx. It's the one of these Cannabis Pot Etfs. One of my subscribers asked me to look at this. So pot stocks have been declining all year long. As you can see, this ETF was near $30 back here in February, all the way down to $8.70 recently. So they asked me my thoughts on it. So I drew this downtrend line, and you can see it's stalling right here. But it is interesting if it can eventually break that, for it to come down here and then bust that trend line. I may be interested in taking a long finally. All right. Obviously, well, I guess that does it, guys. So we'll see what happens tomorrow. Futures, what are they doing tonight? Let's see. So futures are up pretty nicely. ES is up about 18 points. Again, market's quite oversold here, guys. So, not surprised to see futures up. We'll see where it is in the morning. And that'll do it. Have a wonderful evening. And we'll see what happens the rest of this week. Take care.